Hi, I'm Erika Hamilton with Better Homes Georgia Properties, and we're here with Brian Martin, who is a mortgage broker with Ameris Bank. Hi, Brian. It's good to have you.
Hey Erika, thanks for having me.
Brian and I have been working together for probably 12 to 13 years, and I very much appreciated the fact that he has helped my clients to not only get approved for a loan, but make it to closing uh, without too much stress. So, Brian, I know that you were excited about a merger with Ameris Bank.
Yeah,
Can you tell us a little bit about that?
of course. For those not aware, Fidelity Bank merged with Ameris Bank just back in July. So even though I've been in Fidelity for the last 10 years, we've now merged with Ameris. So I'm an Ameris Bank employee. We're real excited about the merger. They're a bigger bank. They have kind of operated in the same footprint. We have really similar backgrounds, really similar philosophies towards client focus, but the big thing for us is just bringing some new synergies, bringing some new energies together. They did some things a little better than we maybe did at Fidelity. We do some things maybe a little bit better, kind of seeing what works and going through that right now. So we're just super excited to be part of the team.
That's awesome. And that merger happened in December of 2018.
It was
right?
announced December of 2018, but like anything in banking, it always takes a lot longer
I
than it
see.
should. So
Okay.
we officially closed on July 1st.
That's great. I know when we spoke about the merger coming, you were very excited about some new products that you were going to be able to offer. Can you talk a little bit about 100% financing and any other products you have?
One of the neat things with Ameris is going to them, they had always had a 100% program. They called it their Ameris Dream, but it's a first-time home buyer, single loan, 100% financing product. So it's a great program for a buyer that's just really struggled to get the down payment they need to get into a home, but they're in good financial standing elsewhere, they have a good job, and can certainly support the payments, but just that barrier to the down payment. They also have expanded portfolio options. You and I were laughing yesterday. We have a lot loan program now. We had never had a lot loan program. So I have a client I'm working with to buy an actual lot that eventually they'll turn into a home. We also have 100% financing for doctors, dentists, some other products like that. We also have a 100% first-time buyer program called the Ameris Pride program, which is a 97% loan with a small second mortgage that allows the borrower to actually borrow their down payment for the minimum required and actually contribute a little bit of that down payment or that loan to their closing costs. So
That's awesome.
you can actually get into a property with really just the earnest.
That's great. That brings me to the next question, which is I know most people that are getting ready to buy want to know how much cash they need to buy.
As much
as
that.
as far as a down payment is concerned, can you talk a little bit about that?
Generally, for a first-time home buyer, unless they're doing one of our no money down programs, one of the 100% financing options, or whether or not they're an eligible veteran or maybe buying something outside the Atlanta area where a USDA loan would be there, generally you're looking to put a minimum of 3% down. 3.5 to 5 is probably a good rule of thumb. So in the Atlanta market, in our median price, that's $7,500 for a $250,000, which is generally a median price home in the Atlanta market. So I would say a good number for a down payment would be if you have at least $7,500 saved up. Down payment sources can be flexible. You can get gifts, you can get grants. Your employer can help you out with the down payment. There's a lot of different ways to structure that. But generally, if you have that $7,500 and you're looking for a median-priced home, we have an option for you.
And I think you mentioned that it's a good idea to check into it and not wait until you have a certain amount of money and then miss your opportunities in the market.
That's probably the biggest myth out there towards a first-time home buyer. I hear it all the time. Well, I don't have 20% saved, or I don't have 25% saved. Well, you really only need that 3 to 5%. And if you've saved that up, you've got to weigh how much longer it's going to take you to save that 20 to 25% down to make up that gap. And in a market that we're in where home prices seem to be going up, you might be in a situation where by not buying now, the house that you want is $20,000, $30,000 more by the time it takes you to save that up. So you've eaten into your buying power just by the home going up in value. So we always recommend put down as much as you're comfortable with. Obviously, if you can put more money down, that's great. You may likely get a lower interest rate. You may not have mortgage insurance costs. You're going to have a lower payment because you're not borrowing as much. But if it comes down to not buying now because you're trying to save more for later, you might want to look at that calculation and kind of get an idea as what are home values really doing in the area. And Erika, that's where you can help. Say, hey, look, we're seeing year-over-year appreciation of X. If it takes you 2 years to save that down payment,
Exactly.
that house is going to cost you this much more.
Absolutely,
So.
that's great advice. Another question that I get a lot is what is an FHA loan? And can you also explain why some properties qualify and others don't?
Sure. Well, FHA financing, I kind of think of it as the original first-time homebuyer loan. They have forever been one of the lowest down payment options. You're not required to be a first-time homebuyer. But these loans are backed by the full faith and credit of the U.S. government. They're insured by HUD. So the HUD and the U.S. government doesn't make the loan, a bank would, but they just step in and insure it. There's generally 2 different types of mortgage insurance with those loans. And it's a little bit more flexible when it comes to underwriting. So whether or not it's credit score is maybe not where you want it to be, you might be a good candidate for an FHA loan, or they're a little bit more flexible on debt to income ratios. So they will allow you a little bit more buying power, which works out great for a first-time home buyer who may be making some changes or expecting to earn more in the coming years. They can be a great resource to get into that first house. Occasionally we get some pushback from the seller. Because these are generally loans to first-time home buyers and there's not a whole lot of money down in them, HUD and FHA, they want to make sure the house is in pretty good shape.
Exactly.
So they're going to check that house for safety and soundness. One of the big keys are roofs, floors. They want to make sure the house is in good shape, that there's no safety issues. Without fail, I'll see an appraisal occasionally that's like, hey, you need to replace those deck stairs.
And they expect the repairs to be done before the closing, right?
Yes, ma'am. We do have a product out there and some programs out there that allow that to happen after closing, which the seller can actually escrow some money to have those repairs done after closing. But generally speaking, they're going to be required to be done really right away. Because if it affects safety and soundness, HUD and FHA want to make sure that's the case. Now, conventional loans, that's a little different. They're more buyer beware. Hey, you have a chance to inspect this. You know what to expect with this house. And they're going to go a little bit easier on the appraisals.
Awesome. Okay. Now to your favorite subject, which is the do's and don'ts when you apply for a loan before and during the loan process.
The biggest do I can tell you is ask questions. Ask as many questions as you can. I joke with clients, start a notebook after you first talk to me. Put a notebook on your phone, just something to type in. Because when you get off the phone with me or whatever loan officer you're working with, something else is going to pop in your head. So make sure you ask plenty of questions. You want to know how much funds you're going to have to close. What's your interest rate? What's your payment going to be like? What are your responsibilities throughout the process? The more you know, the more questions you ask, the easier it is for all of us. In terms of don'ts, don't go buy a new car. The joke, and it happens all the time. We'll have a loan in process, and I'll get a call and be like, hey, Brian, not sure if I need to talk to you about this. And I'm always like, oh, no, this is not going to go the way I wanted. And it usually is, we bought a car this weekend, or we financed all our furniture this weekend. Is that going to be a problem? Generally, it's not, but sometimes it is. And those are snags that we can hit. I generally tell people, if you can hold off against any big purchases, do it during the loan process. So don't make any big purchases then. And if you are going to be in a situation where you have to do something, honestly, let us know as soon as you can, as early in the process as possible. That way, if there is any pitfalls or we need to make any corrections or changes, we have time
And
to
the
do it.
same goes for any sudden deposits that somebody receives into the account that they're going to use for their down payment, right?
Yes, generally that'll come up in the processing, in which we're going to review not only your income documents but also your asset documents. And one of the things we're looking for are large deposits or irregular deposits, as they can oftentimes be evidence of a new loan you've taken out. So if all of a sudden there's a big irregular deposit, our underwriter's going to want to know where that came from. Generally, it's not a problem. It might be a gift, might be a grant, might be you got a bonus, or you may have gotten inheritance money. As long as there's a paper trail, it's simple. So, but those are kind of things as part of the pre-qualification process. I always try to ask is, where are your funds for closing going to come from? So that we have an idea early on in the process of where that money's coming from. Are you pulling money out of a retirement account? Are you liquidating another asset? Are you selling another asset? If you are, how we're going to document that and make sure we're all on the same page, because generally speaking, they're not issues.
Exactly.
But
if you can explain them.
Yeah, if it
Yeah.
makes sense, and there's an issue there. So.
Okay, awesome. Can you go a little bit into the timeline? Well, how long does it take from applying for the loan to being able to close?
Well, what we see generally on your side, there's a 28 to 35-ish
Exactly.
day
Yeah,
contract
yeah.
to close. So with us to operate within that time frame, we run about 20 to 25 days on a perfect transaction. That's application to where we're fully approved and you're ready to send the closing package to the attorney. We can go quicker. I think the fastest loan I've closed this past year was 10 days, start to finish. Now, that does require a little bit more work, but not more work on my part. Really, Erika, and I need more on yours. It's really the borrower's work. I mean, we've got to order that appraisal right away. We've got to get the documentation in right away. We don't really have time to wait for due diligence and other things.
And so there's a lot of responsibility on the buyer side to give you the information that you need to be able to process
Absolutely.
it.
I joke with those deals, if you're willing to go fast, I'm willing to go fast.
Yeah.
So we'll go as quick as we can. But generally 10 days is about as quick as you can cut one. But 2 weeks is not a problem. We close those things all the time.
Right.
But generally that 28 to 35 day contract to close on the real estate side translates to us in about 20 to 25 days for about perfect.
Yeah. And you mentioned too that you now can help people with remodeling and construction loans.
Sure.
Can you talk a little bit
Probably
about
my favorite deals to work on. We get a little bit more involved in those. We get to do something. I even joke with someone that so many times I just look at numbers. Somebody's buying a house, it's X, this is the rate, move on. But when they're doing a renovation loan, I see what that house started as. I see what it finished as. So there's a little bit more to it than that. There's also on the construction side, you're taking a house that literally is two-dimensional, sitting on a sheet of paper, and you're seeing that thing built from the ground up.
That's
So
awesome.
they're exciting to work on. They're fun. We have products that require as little as 5% down for the construction loan. If you're not ready to buy or build just yet, but you found that perfect property, that's where that lot loan kind of kicks in.
Yeah.
Again, that's just a great product that I really haven't had access to in the past. And it just allows you to buy that property and then conceptualize what you want to build on it and not have to do it all at once. And that's really the only drawback to the renovation.
And the
project.
bank, depending on the construction, obviously with new construction, the bank has their own inspectors that go and make sure that the different stages are.
Yep.
And I think that's a security for the buyer.
It certainly can be, because we're working on their behalf. As we joke, it's their money.
Exactly.
We're just spending it for them.
Yeah. And
Or
the thing
signing
is,
off on them
it keeps an eye
spending
on
it.
the builder.
It does, and
Yeah.
we're all in partnership in that. So
Exactly.
when that on a new construction or renovation, that home's appraised two different ways. We appraise it as is, and then we appraise it at completion. With a new construction, we appraise it based on the plans and the piece of land it's being built on. And then we come back out to the final inspection.
Yeah.
But throughout that process, our construction lenders, and sometimes we have to outsource these, but oftentimes our construction lenders are actually doing the draws and inspections
That's
themselves.
great.
So they're going out and seeing the property being built. It's kind of fun, a year or two later, drive down the street and go, hey, I financed that house.
That's awesome.
Where on just a traditional transaction
yeah,
that normally doesn't have that.
Yeah, you forget about it. Finally, very briefly, can you talk a little bit about the investment loans? Do you also handle the type of property
Sure, yeah.
and what sort of the requirements are?
Well, Erika, you and I have worked together for a long time.
Exactly.
And I think one of the reasons why we work together so well is we both understand wealth in real estate. And whether you're buying your first house, it's a great way to build that initial build of wealth. But if you start investing in real estate, you can really build a lot of wealth and high net worth really quickly. There's very few other investment opportunities that you can leverage at 75 to 85% the way you can with a mortgage. So if you're buying an investment property, you generally have to put 15% down on the sales price. Oftentimes we can use the subject property's rent to actually offset the mortgage payment. That makes qualifying easier. So really it's a case of picking out the right property and coming up with a down payment. We do 1 to 4 unit residential properties. So that's generally single family homes, condos, townhomes, your duplexes and your quads, So we can pretty much handle anything that's residential in nature. Commercial stuff,
Yeah,
That's outside my
yeah,
pay grade.
yeah.
But the residential stuff we handle, all that in house. We can do up to 10 loans right now for on the
Okay,
residential
for the
stuff.
same buyer,
Yeah.
that's great.
So
Okay.
we're doing more and more of that, and you look back after some of these clients we've worked with, and you look back 3 or 4 years later, they now have not one property, not two, but they have 5, and they're all producing income.
Exactly.
And that is great retirement income. It's great net worth. It's great wealth.
Exactly.
They're
that's
investing in hard
right.
assets,
Yeah.
and they're using someone else's money to handle most of
I
it.
think that's the idea for
Yeah.
most investors, is to free up their cash.
Yeah.
Because they can actually buy more properties that
Well,
way.
yeah, if you have $100,000 to invest, you can buy 4
Four,
properties
exactly.
instead of
Yeah,
just buying
one.
one for cash or
Exactly.
putting
Yeah,
100,000 in a mutual fund.
Absolutely.
So there is a little risk, but
Yeah.
there's definitely in the Atlanta market still some great opportunities, and with where rents are,
Exactly.
you can get cash flow positive pretty quick.
Yeah, absolutely. Well, this has been really interesting, and
Yeah.
I'm just wondering, is there anything else that you would like to add?
Well, no, really. I'm kind of look at my business as I'm here for you and for you. So when there's questions that come up, give a phone call. Every one of them is different. Every situation we've worked on, everyone has been a little bit different,
Absolutely.
and that always is the case. So we're here to meet your needs, and if I can be of any service, certainly let me know. Erika, your partnership over the years has been invaluable. I've learned probably more investing in real estate just in our conversations
unreal.
than I have read elsewhere. So
Yeah,
I certainly appreciate that, and thanks for your time.
Thank you.